GM everybody，大家下午好。诶，坐错位置了吗？Nice to meet you all and welcome to our lovely panel today. And it's my pleasure to be the moderator today. And we have 4 powerhouses to join us. So first of all, we have Kenny from Manta, and then we have Wen Loong from Somnia. We have Karen from Serotonin and Elsa from DeCard. So maybe let's start with having them giving a short introduction and also what the company does so we can have a better understanding. So welcome, Kenny.
Thank you. Hi, everyone. I'm Kenny. I'm the co-founder over at Manta Network. It's the largest modular L2 that we've been building over the past 5 years. We have a team of around 45 people globally. And yeah, happy to be here. Excited to always be back in Taipei.
Hi. So my name is Wen Loong. I cover BD for Somnia. Somnia is a layer 1 EVM compatible chain. We went live 2 days ago. And so we can say we're the fastest EVM that's live. That's me.
Hi, I'm Karen. I'm the Business Development Director at Serotonin. Some of you may have heard of us. We are one of the premium sort of growth stack engines out there, and we help projects with their marketing, PR, go-to-market, tokenomics, advisory, translating complex narratives into powerful storytelling.
Hi, I'm Elsa. I'm from DeCard. I'm Managing Director of Payment Innovation, leading BD and strategic partnerships. DeCard is a Web3 arm of a financial institution, DCS. So we are the global Web3 card issuers and the payment infrastructure globally. Thanks.
Thank you, panelists. So I would love to start with like a very simple questions, but maybe like institutional adoption is not a big word for us, but it's actually kind of like a big word for a lot of us out there. So maybe in a simple sentence, what is your understanding or what is the right understanding about institutional adoption?
Yeah, so great first question, right? Defining the topic of the panel here. So institutional adoption, I think, is an extremely pivotal moment for the crypto space because up until recently, right, like it's largely been a conversation around, you know, magic internet money. What is it backed by, right? It's only going to be used for degen and gambling. But now we fast forward to 2024, 2025, we're starting to see a lot of very large institutional money coming in, right? Institutional being a very loose term for everything that's outside of retail and native to crypto, right? And so we're looking at banks, we're looking at hedge funds, we're even looking at governments starting to take this sector extremely seriously. And because all of these large players are now starting to get involved, I think we're opening up another chapter of massive opportunity for the space. And so, you know, despite it being around for almost, you know, more than 15 years now, I think we're still extremely early. And the next few years, because of institutional adoption, is probably going to be extremely exciting.
I can go. What does it mean for institutional adoption? So what it means, in my opinion, is when we see institutional hesitation turn into participation. So what we're seeing is like big sort of institutions coming in like Franklin Templeton. They've actually created a US kind of like government money sort of fund. I can't remember the acronym for it, but this is kind of showcasing the fact that things like tokenization is going from sort of like an experimentation into actual rollout that's live and at scale. And then you have like MakerDAO, which is allocating a lot of funds into sort of like tokenized treasury bonds, which also showcases the fact that a lot more institutions are taking the industry much more seriously. And it's moving from just pure retail speculation into something like, I think DeFi and institution, there's always that paradox of regulation versus, I guess, user privacy. And I think, you know, once we solve for that in terms of compliance, AML, we'll see a lot more sort of like participants coming in.
Yeah, totally agree, because like if we're talking about institutions like adoptions, not only like Web3 crypto natives, definitely like say compliance and security plays a very important roles. And for institution now, everyone is talking about stable coins, talking about the different rails, cross-border payments. This is the very point that we see that we're bridging the Web2 and Web3. And for the institution, they are looking for not only like say on-off-ramp, the rails, but also the infrastructures to get them onboarded, like say for the global stablecoin infrastructure, and also this is what DeCard and DCS is doing. Yeah, so one side is traditional financial institution, one side we are leading the Web3 payments and cards. Thanks.
Sure, I'll just add a little bit as well. I actually think that it's great that we kind of try to define it, because institutional is quite a loose term. In fact, on the way here, kind of just thinking about it to myself, like what on earth is institutional money? I think it's a very loose term, and should we include like corporates in there? Like SMEs are clearly not what we imagine to be institutional money, but at the same time, SMEs are a very large sector out there, right? In fact, if you add all the SMEs together, it's massive. So if you loosely term institutional money, then I think Kenny's done a very good job of what we imagine to be institutional money. However, I take a slightly different stance in the sense of where are we at right now. I think we're actually still quite early in terms of the adoption. I think it's still in the experimentation stage. That's why you have like Project Guardian in Singapore, together with, excuse me, together with some of the larger institutions out there, as we define it, that are still experimenting. But that said, I think we are on the cusp of something interesting, where we can see it going, having the technology improved, and also trying to work out some of the issues that the rest of the panel have shared. So I think that's where we're at. And I think that, the last thing I'll add to that is the fact that we need to kind of balance a little bit between the need for pushing it out there very, very quickly, and of course, trying to change some of the practices that we have in the space, while also enabling innovation to continue alongside, right? So you need regulation and innovation. It's I would say the traditional dilemma, if you will, pushing out too fast versus having it go ahead of the regulation. And actually, I come from a legal background previously, and we always say, at least in the common law side of things, that the law is incremental. So you can't really expect the law to lead the way ahead of the innovation space, just because people jumping out of planes and making planes as they land is not something that you kind of want to regulate, even though that's the analogy that people like to use for entrepreneurship.
I also want to add one thing as well, from all these comments, right? I think it also begs the question, why does this matter, right? Like, why is this important? I think that in the technology space, when you look outside of crypto, there's always this pattern of new emerging technologies that enter this extremely volatile phase of whether or not it'll survive. And then there becomes this one inflection point sometime in their history of evolution, and then there's just no looking back. We've seen this in the cloud computing space. When cloud computing first started, no one used it, and everyone thought, oh, only people are going to be using this for shadow IT or their own little backyard projects. No institution will ever take this seriously. Now we fast forward to 2025, every single major large company and startup and everything in between doesn't exist without cloud computing. And I think cloud went through an inflection point. Social media went through an inflection point as well, right? Like when Twitter first started, everyone was like, who cares what you ate for breakfast? No one's going to take you seriously. No one's going to take this platform seriously. But now Twitter can completely erode geopolitical relationships, right? Like if Trump tweets something, then either the stock market goes up or down, right? And so there's an inflection point of social media where now there's a point of no return. I think with crypto and the adoption of institutional finance, it's no longer a question of, does Bitcoin have value? Will Bitcoin survive, right? But now it's becoming a question of like, how big will Bitcoin become? And I think that is now our inflection point in this space, where we're now looking back and saying, okay, now there's no point of, this is the point of no return, and we're only moving up from here.
Thank you, fellow panelists. I think the panelists also sum up a bit of the trend shift in 2025 compared to the last cycle. So will you describe that the current institutional adoption is still in a very experimentation stage, or we are actually already nearing a real integration with the real use cases? So maybe you guys can share a little bit of what are happening in the space, and also what are the very unique real use cases that you have kind of like seen in the past 1 year.
Okay, I guess I'll start this time around.
Thanks.
Yeah, so I mean, I think I kind of hopped ahead in that sense in my thought pattern earlier. I would say that I think that we are on the cusp of integrations. I do see, obviously, that we have people and institutions adopting these along the way. Stable coins being one massive area as well, of course. You know, if any of you in the audience who are part of the ICO phase, tried to buy your ICOs using BTC or peg to ETH, maybe some are pegged to Litecoin as well. You know, there were no stable coins back then, and you couldn't really peg it. You had to peg it to BTC and then peg it back to USD and then figure out, did I lose money? Did I make money? That kind of changed. You know, it's taken a while, but the space itself has evolved. In particular, I would say that there are some kind of good practices coming out of the space that evolved on its own, actually. And I think that will also interface with these institutions, because the ones who are implementing these technologies can bring these good practices or safe practices to the ones who need the technology, which in this case are the institutions, right? So I think we're on the cusp of it. I don't think we're fully there yet, obviously, because we're still asking the question. So I think that kind of proves itself. If we were already there, we wouldn't ask these questions. At the same time, just to kind of wrap up, I think, you know, even for cloud technology, which Kenny rightfully pointed out, you know, we do all use it in many forms, different ways. You know, in your Apple phones, your photos, that's cloud. But at the same time, it will surprise you and amaze you how many businesses out there, the smaller ones, don't use it at all. They've got a ledger somewhere, they've got pen and paper, they've got Excel. So is cloud technology adopted? Yeah, I would say so. Is it adopted everywhere? I'd say no. At the same time, it's been integrated. That's the way that I would use the same framework to kind of think about crypto, some of these things that come into the space and DeFi as well, because I think that's useful. Will you see full adoption? Maybe not the same way you see Facebook has that many users, but hopefully we will.
I think the one single biggest use case for crypto is stablecoins after 10 years. So if you cut through the noise, like what stands out? That's payments, that's stablecoins. Why? Because even if it's fighting inflation in Argentina from settling trades in Asia, stablecoins powers the entire financial ecosystem. So like DeFi, the DeFi ecosystem wouldn't survive, wouldn't be here without stablecoins, right? So I think that is the one biggest single use case. And yes, we're still kind of experimenting with it, and it's still early stages. So from the institutional standpoint, they're looking at it from a private credit kind of like standpoint. It's treasuries, it's bonds, it's real estate. It's not complex derivatives. So I agree in that respect that we're still experimenting, but it's kind of like moving in the right direction, and we are moving to the point of no return.
Yeah, and we saw a lot of, like, say, institutions that are piloting a lot, like, say, innovations. It's not like, say, rebuilding or reinvent or anything. It's just like leverage some like blockchain technologies, say, use cases, supply chain, and all this in real life. For us, because for us, we focus on the cards and the payments, and all this related to, like, say, well, we see the real case is stablecoin adoptions. For all the payments, cross-border payments between the institutions, SMEs, for that to save costs and for the transparency and the cost efficient, time efficient. So this is all, I say, features we see in real life use cases. And for DeCard, we see that this is our, like, say, first-hand information, because when we see the pinpoint from all the Web3 natives, they're holding the stable coins, but how they use that, how they utilize that, instead of only, like, say, investing. But people are using that for the real life payment. Yeah, so this in other regions, in, like, say, Latam, Argentina, these countries just mentioned, The local currency is very volatile. People prefer to hold stable coins. Not only the, let's say, retail users, but also the institutions, merchants. They prefer to hold stable coins to kind of go against with the volatility of the local currency. So in payment, this is a real life adoption. We saw that. So a lot of institutions now adopt this, not say innovation, but they want to bring this to more wider range of group. Yeah, thanks.
Yeah, so I think all the comments here make a lot of sense, and we're still very early. I think we all agree on that. But it's really funny because when you look at the way that institutions are now starting to adopt crypto, history is repeating itself. It's the exact same way that retail started adopting crypto, but many, many years ago, right? You start with Bitcoin, that's the entry, the gateway drug, and you start playing with Bitcoin, and it's fun, but it's not amassing the opportunity, the financial opportunity you're looking at. And so now what are institutions doing? They're starting to look at Ethereum, just like how retail did, right? And then what happened after Ethereum? Ethereum ICOs, right? Retail started thinking about applications and all these use cases and all that stuff. And I think institution hasn't caught up to that chapter yet. The chapter that we're on is still, around stablecoins, right? Exactly as Karen mentioned. And stablecoins, I think, are very interesting for these institutions to think about because it's very native and understandable for them. But I think eventually there's two things that are going to happen in the near future. One is the rise of institutional grade applications. And this is going to be very different than what we see in traditional finance because this is an opportunity to replicate and improve the existing financial structure and have new giants dominate this new market space in the Web3 side, right? Like when it comes to index funds, everyone thinks about S&P 500. That's on the NASDAQ side. But there is no market share dominance for that equivalent on the blockchain side yet. And I'd be very surprised if institutions aren't thinking about how do they bring this market over to the crypto space so that in 5 to 10 years, they have that market dominance. That's one thing. The second thing is the inevitability of completely disrupting banking. Right now, for people that are in the crypto space, it's not uncommon for you to just put your money away and earn like 10% APY. It's not absurd. But if you did the same thing with a bank, what are you getting? You're getting like 0.25% to 1%, right? Like as you think about this 5 to 10 years from now and stablecoin adoption becomes so mainstream and everyone here has stablecoins, what are you gonna do with them? Are you gonna put it back into your bank and get 0.25%? Or are you gonna put it on chain and get 10%, right? This is a direct competition and threat to the existing economic structure of the banking system. And so I think the very smart banks are actually starting to think about, okay, how do we capture this market opportunity? And this early sort of experimentation, this manifestation of their concerns is already happening. We see these centralized financial institutions starting to launch L1s and L2s, and we know where that's going. Like that's a great experiment, but like we know how this story ends. But on a greater scale, it highlights that concern and the fact that they're thinking about this as that potential next chapter for them, either as market dominators or complete replacements to the way that they're currently doing business.
Thank you, panelists, and I think it's a very interesting insight or input that institutional move is actually eventually will follow what the retailers think or what the market needs. But I think institutions also have different needs compared to retails, and the biggest challenge or barrier right now will be regulations. So what is the biggest regulatory or compliance barriers right now for institutions, and what are the how protocols can design infrastructures to kind of like overcome these barriers to help institutional to kind of like have a better or smooth transition into the DeFi industry?
I think the biggest regulatory barriers is that you've got fragmented sort of regulatory frameworks, right? So they have to So institutions have to think about like the different jurisdictions and their regulatory frameworks. How do they adhere to that? So I think there's complexities that they have to navigate around. And also, I think, again, it's that paradox of regulation versus sort of like data privacy, right? Because if you're thinking about DeFi, DeFi's ethos is focused on being completely permissionless, whereas institutions are focused on like sort of AML, KYC, and these are the rules that they have to adhere to. So I think the question is, how do we architect systems that sort of appeal to both and so that they can coexist in the same space? And there are kind of like protocols out there that try and solve for this, like ZK KYC, which is like a permission front door, but then without revealing sort of like data privacy. So then it allows institutions to be able to interface with DeFi and access it. I think what institutions are looking for is for DeFi to fit into existing frameworks, but give them the benefits of DeFi, like programmability, transparency, yeah.
I think that when it comes to regulation, right, like in the crypto space, we're so surprised and astounded by regulation because we have so little of it. But institutions are coming from a very heavily regulated industry already. They're not coming into crypto and being like, oh my God, what's up with all these regulations? Like, it's the exact opposite, right? They're looking at this and saying like, oh my God, there's no regulation. And I think especially with the current US administration, things have definitely shifted, right? Like in the Biden era, what were all the institutions looking at? They were looking at CBDC, central bank digital currencies, right? That was the hot acronym back then because it wasn't certain that they were going to launch it on a blockchain because they had no idea how to even touch the blockchain because regulation was so heavily inflicted on chain, right? Like it's just, if you were under the Biden administration and you tried to launch a blockchain project in the United States, it's a completely different story than if you're under the Trump administration where the family themselves are launching meme coins, right? And so the narrative has completely shifted from CBDC over to stablecoins because I think institutions are now seeing this as an opportunity to actually enter into the space. And why are they so interested in stablecoins, apart from the fact that everyone uses money? They want access to global liquidity. And I think that global liquidity is the biggest regulatory confusion for a lot of these institutions when they're thinking about how to become a huge market share player in this space. Because when you're a US institution and you're only serving US customers, you only have one country's law you need to follow, and that's the United States, right? But now when you open up a new DeFi protocol and then you've got US citizens using it and you've got North Koreans using it, right? And then you've got Russians using it, I would be surprised if the US government doesn't knock on your door and say, hey, what the heck are you doing? Right? And so I think the regulatory hurdle that most of these institutions are thinking about is not about, okay, how do I circumvent or use the existing regulations in my country, but how do I play around with the regulation of the globe in order to launch these types of products?
Yeah, just a little bit. So let's say if unlike let's say fiat, fiat is as Karen mentioned, the compliance and regulatory is very fragmented. But for stable coins, we have access to a global user base, global world population. So when it comes to we always see the institutional adoptions and compliance, they always start from the West, then come to the East. So we see this latency actually the compliance adoptions. And a lot institutions, they want to do something pilot programs and all this, but they will wait for the regulation comes out. See, we do have sandbox and all these programs to test out, to have these pilot programs. So, and for us, we very focused, because as a financial institution, we need to talk to the regulation very actively to see what the adoption. So whether we can do, yield programs for the card programs, or we only do purely convert to fiat, because everyone knows that fiat yield is 0.25, but a lot of places 0.05. And for that, if like say government have this step, we do sandbox on the yield product, we can get like say larger institutional adoptions for that. But yes, we're actively exploring for the regulation compliance for that. More institutional funds come in, then we can have this product for retail market even. Yeah.
I think for me, the way I view what regulations or regulatory issues are, I kind of bucket them into consistency and nuance, right? So you need a framework that can be consistently applied across jurisdictions, but not just jurisdictions, even in the same jurisdiction, how do you cater to your entire spectrum, right? So you've got the institutions, but you've got retail, and then you've got SMEs. Even when you look at, for example, crowdfunding licenses or any of these licenses, they do kind of have an entire tier. Which ones enable you to open it to retail? Which ones enable you to open it to maybe your more advanced user, for example, or your advanced investor? Of course, those have challenges because you have very, very intelligent and very, very seasoned investors who don't qualify on paper as well. So those things are the way that I approach them. The second, I mean, and it kind of covered it already, is nuance, right? How do you ensure that your entire spectrum is catered for? Because you don't want to, at least in crypto, the idea is that you want to make sure that the masses, if you will, and that covers the entire spectrum, right? All your social economic statuses, they can have access to those things. But you need to make sure that certain guardrails are there so that even your mom and pop or your grandmas and granduncles can kind of access the space. Now, how do you balance all of that into a single framework? I think is a big question. Now, is that kind of two first principles? Maybe. But it's something that we must consistently keep in mind, right? Either that or you will see very, very niche applications come in. So one will target, for example, more institutional base. Another will target the masses. And the day that you find an application that can somehow balance these, I think you kind of have a super application in that sense as well.
Thank you, panelists. So I think to sum up, the current regulation diversity in the APAC region is still one of the biggest challenge, and I believe it's still an experimental playground for institutional DeFi adoption in Asia. So I think just the last questions, from ZKPs to like unified metaverse layer to product studio to payment protocol. So in your words, how is institutional adoption looks like in the next 5 years? And maybe how your platform contributing to the next journey?
I think it's going to be a hybrid model. And it's going to be, institutions will be able to, it's like composable, right? And they'll be able to pick and choose how that looks like to them. Like the one thing that we've got to remember is that institutions, what they're wanting out of like the sort of like DeFi isn't what the retail users are wanting. It's not 1,000 times perks. They're looking for risk-adjusted returns. They're looking for predictable liquidity and outcomes, right? So it's a case of like, in 5 years' time, it's not going to be a case of institutions wanting access to DeFi. It's they are going to build on top of DeFi, and it's going to power the entire financial infrastructure, but it's going to be at a composable hybrid model kind of level.
Yeah, totally agree. Like say hybrid, because in 5 years' time, if we as a Web3 natives, like DeFi degens, we definitely, for example, we prefer everyone holding stables, holding the digital assets. But in real world, a lot of places we're still using cash. We don't even have digital payment. We don't have a bank account. So definitely we see a long way to go with the fully on-chain or decentralized. This is not only about compliance regulation, but also user experience, user interface, user education, adoption. So we see, hybrid mode definitely for 5 years' time at least. Yeah.
I think the future of on-chain finance is a completely different world that institutions will not know how to play in for the next 3 or 4 years. That means there's a lot of opportunity for us already in this space to have a very strong head start to capture the market share in the opportunities we think are available. And I think the biggest opportunity will definitely be in translating traditional financial instruments that are already existing billion-dollar markets and reconstructing them on-chain. We've already seen a lot of people doing this, and we're placing massive bets ourselves at Manta on this also. I think it's extremely important, and the nuance is extremely important as well, because when you're not satisfied with your bank, if they don't give you the good interest rate that you want, what do? Do you migrate to another bank? No, you can't do that, right? Like you're going to spend 5 to 10 business days just trying to open another account. But on crypto, instant withdrawal. It's full self-custody. You have a lot more power as an individual user on the blockchain side of finance than in the centralized side of finance. And I think that's what a lot of institutions don't understand, and I think they're going to spend probably the next 2 to 3 years trying to copy traditional financial products on-chain and then wonder why users aren't going to be using them. The only way they can be competitive on-chain is if they truly provide maximum value to users, because if they can't, another DeFi protocol will. We've already seen this in this space for the past 3 years, right? And we're going to continue seeing that play out. And any institutions that don't realize that, that's an opportunity for us as native builders to take advantage of and build bigger market share in a shorter amount of time.
Okay, so I'll keep this short because I see we're actually out of time. But how are we contributing at Somnia, right? So we've basically enabling people to build. And we've built a chain that's insanely fast and very affordable. Something that's pretty new is that we've actually put a curve in place where the more transactions that occur, that take place, it actually gets cheaper. The reason for that is the sheer capacity of the chain, right? So imagine a world where you're not just having financial data, right? You've got the next generation coming out playing games and metadata is written. Now you can kind of have a scenario where you can profile, can target by their agreement as well, because they want to know what's out there. They agree to give you the data. They are compensated for the data. You can kind of profile who they are. All this is now kind of more possible and possible with the chain that we've built. So that's the way in which we're contributing to the next stage and the next step of development in DeFi, in gaming, and everything else as well.
Thank you, my fellow panelists, and I hope that we brought insightful panels for everyone. So thank you for having us.